And welcome to the latest episode of Hung Chin Hon or Sweatin Money. I'm your co-host. Wait, I forgot. Oh, screwed that up. Screwed that up. Come on. No, let's not get to the news first. There we go. So we may or may not own or have ownership in or other positions in the stocks mentioned in the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. Now we're at the part. I'm your host, Kong, along with my co-host, Gibson. Now let's get to the news. Finance ministers around the world have vowed not to devalue their currency and cause a currency war, something similar to what we saw back in August when China did just that. Seeing as there is very little effect on their own country's exports, this may be a good thing.
Yeah, it is. I mean, but if game theory has anything to do with it, chances are everyone's going to devalue the currency, but who
Well, no,
knows?
that's the thing, though. They tried it last time, and I mean, everyone just tried to devalue their currency, and nothing really happened. I mean, stocks kept going down, exports didn't increase all that much. I mean, it just sent the international markets into a panic. So I think
Yep.
that's the reason why people are like, okay, well, let's not do that this go around.
Well, they already knew that this would happen when they tried it the first time around, so
You
same
sure about
factors
that?
are. Well, I'm just saying if game theory has anything to do with it, it's basically if they collude, then they're not going to have the tragic case, but if they don't collude, then they're basically able to profit from the market forces.
I think that's the
So,
thing, though. They didn't
yeah.
collude the first time around, and so everyone is just going into a price war, and you know, now they're
Well, I'm
actually
just saying,
colluding.
I doubt it. There's a certain factor. I mean, unless they sign an agreement or something, which they never do, there's always going to be a factor. There's always going to be a possibility. Yeah, I'm just saying it's because it's kind of like no one wants to be in the position that they're at. They always want to advance beyond that, and
Yeah.
because of that, there's always incentive for them to actually lower the currency. But who knows? Maybe there will be an exception this time. But not if game theory has anything to say about it.
Well, we'll see. I mean, that's what they proposed. So now, if you are a fan of Whole Foods, um, I mean, you like their organic, free range, free trade products, and if you like that stuff, just to let you know, they have another set of recalls again. This time, they found some listeria in their cheese.
Which one? Not the one I eat, I hope.
No, all of them.
Oh,
Well, the stuff at Whole Foods. Did you shop at Whole Foods?
No, 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 no. I'm a Costco shopper. I figured maybe
Oh,
there's a brand of cheese that they have that they sell at Whole Foods that might be related to the brand of cheese I normally eat.
oh no, no, I don't think so. Because if that was the case, at least they would have announced it. I mean, Costco definitely would have announced it.
That's true. Well, I
Yeah.
am safe.
Good thing for you being a Costco shopper.
I know.
Full disclosure, I do own stock in Costco.
Ha, nice.
So U.S. data flow suggests economy is regaining steam. In short, most depression estimates seem to be overblown, according to what certain economists say. But then, of course, if you look at the technical analysis, according to some people, we are still headed towards a depression. So, what's your take?
Well, it's a very complicated question, I think. It's truthfully it's answering what drives growth. What drives GDP growing and so on. What is GDP and etc. Well, if you look at there's a formula that defines what GDP is, it's a factor of disposable income, imports, exports, and a bunch of other factors. Um, yeah, so I don't know. I think with the entire world kind of showing signs that they might be going into a recession, there might be. I mean, it's not exactly a bad thing. Recession's not exactly a bad thing because then a lot of people think recession means that you're basically going down, but recession really just means you're not going up. It's when your economy experiences a rate of growth that is or is not growing as fast as it used to be, then you get declared to be in a recession. But then you're still growing, you're just not growing as fast. And then there's also depression, which basically it's the reverse of expansion. I'm not quite sure if we are going to recession, but there are signs that indicate that there are slowdowns. I mean, China is pivoting away from, let's say this, the factory hub of the world is no longer like like just China. It's probably the work's going to be dispersed to other nations,
Oh yeah,
and
definitely,
then, huh?
definitely, yeah.
Yeah, so it's going to be dispersed to other nations. Now, the question is that people are still, there's a lot of volatility because we're still processing what's going to happen because of that. Like, how is China going to react? If yeah, and then like what role is China going to play? Because the United States and China are such huge players in the market right now. It kind of everyone's like watching them just to figure out what's going to happen now. I think part of the volatility could be because of this. Part of the volatility could be what's happening in the energy sector right now, and a big player in the energy sector, is Iran as well, and Russia, and United States. All these other factors, global factors, the OPEC, China, United States. Everyone's just watching each other right now, seeing what's going to happen, and they're just waiting to process what's going to happen with Iran. Now, factoring the data from Ellen's saying that we're fine because she's basically saying, hey, that's why we're raising interest rates. Um, so she's probably processing the records of, hey, we're doing okay. But then Wall Street's saying that a lot of the firms aren't doing as well as they projected or expected to do because of the what's happening with China and so on. And then basically, the technicals are, so the economic aspect, perception of everything might be indicative that we're not going to recession, that we're in a normative state. It's different from expansion. Expansion is basically we're going into a bubble. Recession is basically we're not growing as fast as we expect or we normally do. Normative is that we're basically growing at the rate we're supposed to, and depression is basically we're shrinking. So Yellen's saying, hey, you know what, we're basically going into expansion. We're trying to bring it back into norms. Wall Street is saying, hey, we're going to recession. So what's the true story? Well, I think it depends. Maybe it is truth that the global consumption is slowing down. Perhaps global growth is slowing down. In which case, yeah, we're probably going to go into a recession. If anything, at least we're between a normative state and a recession, at least at the moment. And then there's other factors that can bring it down. There's other factors that can bring it up. For example, what factors can bring it up? Well, basically, oil is cheaper now, so people can, like for example, the auto industry is doing really well right now because of cheaper gas prices and low oil prices. A lot of companies can benefit, especially if they work in the transportation sector, from the lower fuel prices and the lower transportation costs, and this can increase their profits. Of course, now the question is, well, how big do these companies, how much of a makeup of those companies do they, how many companies, like there's a lot of companies that can benefit, but do they make up a large portion of the companies that are operating in our economy or on the stock market? I'm not too sure, but one company that stand to benefit might be airlines. In this economy, they might be doing pretty well because well, if you notice, like a lot of airplane tickets are very cheap right now. They're very, like, lower fuel costs can help these airline companies. Not only that, but a lot of nations are not in like great states, like Greece, for example. They're very depressed right now. But then you also fly there and basically get a lot for your money now for traveling. So I think the travel sector might be benefiting. So there's a lot of,
Well, not
you know,
necessarily with all the refugee issues
hmm?
there. I mean, you got the influx of the Syrian refugees, and not a lot of people are going to want to go to Greece right now because of that.
Sorry, you're fading it out. What was the last thing you
Uh,
said?
so the thing with the Syrian refugees, the fact that
Uh-huh.
there's so much of them heading towards Greece, and Greece is like the major hub for these people to travel through right now. So because of that, it's actually in certain ways hurting the Greek economy because tourism is down because the uh, that no one really wants to face the Syrian refugee issue head to head.
Well, Greece is kind of screwed either way, because then they're basically forbidden from using monetary policy. So they're kind of locked into this state right now. They're pretty much, I don't know when they might even recover from the new austerity measures implemented by Germany on them. But
Yeah, true.
yeah, but that being said, is that hey, if, let's say this, the price of a lot of services can be rendered for less than the price of a hamburger. Like a lot of random things can be really retardedly cheap over there, and I think that's kind of interesting. People who might be short on money, but it's a massive tangent. I think there's many factors that is going on with our economy right now. Although I can say for sure, there's many things I can't tell you, but one thing we can say for sure is that these are some very volatile times for our markets.
Well, yeah, I agree with you for the most part. I mean, we really don't know which way or the other. I mean, it's going to head. So I guess we'll have to see. Um, now, one of the things that you did mention is, well, the economy and the way it goes. One of the factors, of course, is employment. Unemployment numbers stayed the same from last month, according to the job report that was released just last Friday. Since the Great Recession of 2008, the number of participating people in America's workforce was dramatically lowered, but the fact that unemployment is now down to 4.9% is much better. Wage rates also rose by 2.2%, and compared to the low inflationary times we live in, it's a significant boost, but it's not exactly the sign of a quote-unquote booming economy. Now, in fact, some would say that the wage raise still isn't high enough, despite that there were 555,000 new people in the workforce. There are certain sectors like the manufacturing sector that are still seeing a loss. Most jobs that were added were lower paying jobs as well.
Well, my first commentary on it would be that you know, like the Feds don't promise like high growth. Their goal is just to have like to keep things like to help regulate the economy so that it doesn't go into a bubble and it doesn't go into depression.
Right, of course.
So for them, it's like okay, it's still up. And then not only that, but if you have the conservatives, which aren't really big, they're a big fan of work, but they're not a big fan of increasing the wages. And then there's other factors as well. When everyone else is experiencing economic problems, we're probably not going to see too many inflationary factors as well. It's just, but if of course in a boom, you're going to definitely see a lot of price-driven inflation because everyone's making more money.
Actually, it's kind of funny. I was actually looking at it today where the hold on, hang on.
Sorry, you're fading in and out.
Yeah. Can you hear me?
Yeah, I can hear you now.
Okay. So I was looking at the heritage.org website. It's funded by dang it. Okay, it's funded by the American Enterprise Institute, which is a right-leaning. It's a conservative think tank, and one of the things that they cite all the time is how Hong Kong is the freest economy in the world, which it is. But they attribute one of the major factors to it, the fact that they don't have a minimum wage law. I don't know if I came in clearly enough.
You saying that Hong Kong has laissez-faire economy, and that's due to the fact that they don't have a minimum wage law?
That's what the conservatives say.
Okay.
Yeah. But actually, if you look at all the top 5 economies, except for Hong Kong, all of them have a minimum wage standard.
Mm.
Yeah. It's just that Hong Kong is right at the top. But I should say that with a caveat because Hong Kong until recently did not have a minimum wage standard. Just 2 years ago, they did pass a law for a minimum wage, but it pretty much counts to. I mean, it comes up to about like $3 an hour in U.S. dollars, and that's even for Hong Kong. It's still not enough for a living wage for most people who are living in poverty.
I see. Well, I think what's interesting is that the history behind the minimum wage. Some say that the introduction of minimum wage isn't for like society reasons, like not like humanitarian reasons on give everyone a livable wage, but more for like one person might say that or one historian would say that the minimum wage was introduced to prevent child labor. And you're like, well, how the hell does that work, right? How does guaranteeing a person get paid a certain amount of money reduce child labor? And then basically another historian, I'll explain that in a second. Another historian would say that the minimum wage was introduced because of racism, to ensure racism. You're like, what the hell? So in essence, is that imagine you're an employer. Before you could pay like 10 people $1 and they'll do the work, like whatever you have them do, and it's super cheap. There's a lot of employees competing. But now you have a minimum wage, and then the minimum wage says, hey, you got to pay them $10, like a single employee $10 per hour for whoever it is. And now you have to be more selective. And because of that, a lot of people would, like a lot of employers who before would hire children to do work, would now prefer adults because, children can only bear so much weight, load, and etc. But adults can do more work. So that mitigated the child labor that we had before. Then how is it racist? Well, part of it might be that, like in America, there definitely, I could say there definitely was racism for sure. There probably still is racism in the workforce. I wouldn't say that. I wouldn't want to prove that there is what is there. I wouldn't want to go into whether or not there is any racism right now, but I can tell you that there probably was. Now at the time, basically there was a lot of competition between white people and black people for the same work, and basically black people probably charged less and then got the white jobs. So what they did was ensure a minimum wage. Now with the minimum wage, let's say you're hiring a person and they're basically the same price. Well, there's going to be a preference for the white people just because, people were still racist. So you want to present a good front, even though the labor. So before, perhaps you can make an argument that, hey, it's okay because they're cheaper. But now with the minimum wage as high as it is, then they're like, you know what, let's hire the preferred ethnic for it. So, and in our scenario with, less racism, or let's just assume that there is no racism, then it's basically going to price out unskilled labor and a preference for highly educated, more skilled labor, or skilled laborers, to be more correct.
No, that makes sense. I mean, either way you go, I think, I hold on.
Sorry, you're fading in and out.
Yeah. Either way you go, I mean, well, actually, I'm sorry. Go ahead and explain your position on the uh, child labor, preventing child labor.
Well, basically, it's let's say you hire a person for $10 an hour. You could hire like a little kid, like like a 10-year-old kid, or like an 18-year-old adult. Chances are the 18-year-old adult knows more, has more experience, can handle more work. So you would have a preference towards an adult, and thereby you mitigate the amount of child labor in the market. And gradually, child labor becomes so insignificant that you can add any type of legislation just to prevent child labor once it no longer becomes the norm.
Nope, that's good. So,
Yeah, so going back to how it affects Hong Kong and whatnot, is that yeah, the minimum wage wasn't meant to guarantee that people have a livable wage, at least back then when it was first introduced. Now it's more taken as such, but if you go back to the original intention of the wage introduction, then it's still doing what it kind of did before.
yeah, okay, well,
Mhm.
moving along. The home mortgage rates rose slightly from 3.62% to 3.64%. Granted, this is still lower from the 3.75% rate from a year ago. So, you're going to buy a house?
I had a talk with one of going out sometimes to engagements can be beneficial to expanding your viewpoints in life. It's he asked me to buy a house, or and I was like maybe I don't know. and then there's like house condos and whatnot. He's like, yeah, you know what? You should consider a triplex or like a fourplex. I'm like, hey, wait a minute. So I'm actually looking into buying a fourplex.
How's the search going?
I'm not trying too hard, but I'm like, maybe it kind of might be worth it, if you there are areas that are quite decently livable that may be worth it. Of course, I'll have to give up my current residence, which is the toughest part, really, you know. But then maybe these property can be income properties. But at the same time, I think I'm debating between the ROI, whether or not it's worth it.
Yeah, I mean, like, how much are you going to have to spend? I mean, what's your price range exactly?
Well, there's a factor, there's a measurement on it's called the cap rate. Basically, how much you can expect to get an ROI on, and it goes between like 4% to like 9%. On the super high range, super rare 9%, but then like the common 4 to 5% ROI, which I don't think is much. Um, one argument is that hey, you know what, the asset can appreciate in value, and at the same time, yeah, the asset can depreciate in value too. No one ever tells you that, that home prices can go down and you can be under the water. No one really goes into that. They're always like, oh yeah, it will go up in value. So that's one thing. I've always also looked into like side businesses, like vending machine routes. Like basically a autonomous. What's it called? They're called absentee businesses. I've been looking into those,
Yeah.
and I think a vending machine route supposedly yields like 50% ROI. So compared to 50% ROI and then 5% ROI, I'm thinking about the 50%. Of course, there's other factors as well, like like being a technologist, I can always create things that basically take off, right? But then that's who knows how that goes.
Right.
So I'm still deciding, but right now I'm definitely leaving my money at the market right now, just because I can't tell which direction it's going, and because I have no read on the market, can't have any predictions. It's too much like gambling.
Yeah. We'll
And
talk
if it
about
goes
that
into
in a minute.
recession and I have my money out of the market, I have made money because my dollars are effectively more powerful now because everyone else is poorer, but I
Slightly. Yeah.
stayed the same.
All right. Well, let's take a look at the week in review. Things seem to be going up this week. Well, except for Friday, we saw a slight drop in the growth rate, but all in all three indexes were up. So,
Great.
also, the Dow Jones reached 17,000 for the first time since January. And let's take a look at international markets. As of an hour ago or so, Japan's Nikkei was the first major Asian stock exchange to open. Well, technically the third, but the first East Asian stock exchange market to open. And it was doing pretty good until about 9:30. It started to go for a dive, but then, well, I mean, yeah, it was at its lowest point, but it's kind of coming back up. So, hey.
Yeah,
Um,
it's
oh, go ahead.
interesting. I'm just saying it's volatile.
Yeah, so is Korea Stock Exchange. Korean shares were slightly up thanks to their tech sector. Um, and of course, I mean, Asian stocks in general were mixed because of China's revised growth target. It's actually lowered it. Despite
Interesting.
that, the Shanghai Exchange Index was still up the last time I checked.
I see. It makes sense. I think everyone should just kind of watch the market carefully.
Yeah. No, I mean, news like that normally it's going to be pretty bad, right? You think the stock market would drop if China lowers its own, its own target. So you could either say that the government has stepped in and did something, or some people, specifically Bloomberg, is saying that their tech sector is actually dragging it up. But you never know.
It's possible. I've heard another theory on it, is that the corruption in China is so bad that the officials need a way to kind of hide it or get rid of it.
Oh yeah,
So a lot of startups are getting a lot of investment capital out of nowhere.
oh yeah, that's definitely at play. But that's
Feel
neither
free to
here
throw me
nor
some
there.
investment money. Need it. I think I was over in Hong Kong like last week, and
Yeah.
then dude, the sheer amount of expensive cars I've seen. You know, in LA, you see like 99% Hondas, and then some like maybe like 80% like J- no, maybe 90% like import cars, like Japanese imports, and then some luxury cars and so on. Over there, it was like almost like 99. There's exact reverse. There's like 90% luxury cars, and then a dash of like Hondas.
No, well, you know how like that documentary I showed you, or that short clip where that one guy was like, um, oh, I bought a Lamborghini
I
California.
saw you fading in and out.
Yeah, I know. Um, like that one guy who bought the Lamborghini California because he was going to school in California.
Uh-huh. Yeah,
Yeah. In the college that I go to, man, I mean, a ton of these like overseas students from China. I mean, they drive to school with like their Maseratis and Aston Martins and whatnot, and like to them it's nothing.
I know. To them, it truthfully is nothing, right? I'm pretty sure there's a rule on how much you pay for your vehicle based on your net worth and income. To them, it's literally nothing.
Yeah, well, since I'm not that rich, this is a little bit depressing. So let's move on
Uh,
to other depressing news. The Hong Kong's Hang Seng Index was also down, but it did start to climb back up after about noon or so. It brought it back into the black. Um, but yeah, there's that. So all throughout the Hong Kong index is seeming, it's seeing a bumpy ride due to negative news from China. So
well, I mean, China's going through some transition pains. Yeah, and yeah, I mean, everything's gonna be volatile until we kind of figure that out.
yeah. All right. Well, um, let's get to the next section, the playbook.
Yay, royal flush. That happens all
Again,
the time.
of course. Um, just a reminder: none of the following should be misconstrued as financial advice. This is merely provided for documentation only. So my iShares MSCI Japan ETF expired out of money, and I lost $7 on that. Yelp, I expect this to expire out of money as well, but it doesn't expire till next week. Merck, I sold these guys at a slight profit at $24, but it doesn't make up for my losses. Spider Gold Trust, I was up $55 last week, and now I'm down. But it doesn't expire till the end of the month, so hopefully things will go my way. And so let's take a look at the week ahead. So some of the things we should be looking out for are the Gallup U.S. Consumer Spending Measures, the Labor Market Conditions Index, TD Ameritrade's IMX, the National, NFIB, basically the furniture guys and small business guys. But anyways, yeah. In the international markets, we're going to be looking out for the, oh God, that's so illegible. Basically, China's industrial reports. So,
Yeah,
and
I think that's a great
recommendations.
recommendation. Those are very important numbers.
Oh, that's a horrible picture I did. Oh, anyways.
Huh.
So,
Hey, you're not a specialist in this. It's okay.
yeah, well, anyways. Um, as I'm also thinking about whether or not to fully give up on options, I'm recommending looking at this book, Common Sense Investing, written by John C. Bogle. He also created Vanguard, an investment firm for people who are too lazy to look into the markets, and they win in that their management fees are the lowest anywhere. So, yeah. So just remember, we may or may not have ownership or other positions on the stocks mentioned on the show. Don't buy stocks based on life what you hear from this podcast, and always do your own homework and research before investing in stocks. Oh, and if you like, please subscribe on our YouTube page.